Hello, everyone. We're pleased to welcome you to today's webinar on redefining financial vulnerability. My apologies, investing with confidence for financially vulnerable Canadians, hosted by Prosper Canada. The presentation will begin shortly. Audio will begin when the presentation begins. We'd like to share some logistical information for this webinar. Please note that everyone in the audience has been put on mute. Presenters will be joining you using audio only, but you will be seeing their presentation slides projected on the webinar platform. Please share any questions and respond to questions posed by the panelists using the question box function in the GoToWebinar control panel on the side of your computer screen. We will be holding a dedicated Q&A period at the end of this webinar, but you're welcome to enter questions in the question box at any time during the presentation. A downloadable PDF of the slide deck is available in the handouts function of the GoToWebinar control panel and will also be emailed to all registrants in the days following the webinar. This webinar is being recorded. A link to the recording will be shared on the Prosper Canada website and emailed to all registrants in the next few days. Please feel free to share this with any friends or colleagues who may benefit from the information shared in this presentation. We'd like to begin by acknowledging that Prosper Canada is located in Toronto, which is situated upon traditional territories. The territories include the Wendat, Anishinaabe Nation, the Haudenosaunee Confederacy, the Mississaugas of the New Credit First Nations, and the Métis Nation. Toronto is in the Dish with One Spoon territory. The Dish with One Spoon is a treaty between the Anishinaabe, Mississaugas, and Haudenosaunee that bound them to share the territory and protect the land. Subsequent Indigenous nations and peoples, Europeans, and all newcomers have been invited into this treaty in the spirit of peace, friendship, and respect. Today, the meeting place of Toronto is still the home to many Indigenous people from across Turtle Island, and we're grateful to have the opportunity to work in the community on this territory. We would like to acknowledge and thank everyone on the line joining us from traditional territories across Turtle Island. We're honored to be having this discussion with you, and thank you for taking the time out of your day to join us. This webinar is hosted by Prosper Canada. Founded in 1986, Prosper Canada is a national charity dedicated to expanding economic opportunity for Canadians living in poverty through program and policy innovation. As Canada's leading champion of financial empowerment, we work with governments, businesses, and groups to develop and promote financial policies, programs, and resources that transform lives and foster the prosperity of all Canadians. We help service systems and organizations in all sectors to build proven financial empowerment approaches into their businesses in ways that are sustainable, help them achieve their goals, and tangibly increase the financial well-being of the low-income people they serve. October is Investor Education Month. We're delighted to facilitate a rich session for you today with a focus on investor education and protection. Fair Canada will begin with a presentation on the basics of investing and important points vulnerable Canadians should consider to determine if investing will benefit their financial well-being. We will then hear from the Ontario Securities Commission on common types of investment fraud, warning signs to look for, and what to do if you're victimized by a fraudster. And our final presentation will be from the Investor Protection Clinic at Osgoode Hall Law School, where we'll learn about the free legal services they provide to individuals living on low income who've been victimized by investment fraud or malpractice. We'll conclude our webinar with a question and answer period at the end. We are thrilled to be joined by our three panelists today, Tasmin Waley, Christine Allum, and Bridgett Catallier. Tasmin began her career practicing U.S. securities law at a New York-based law firm. Since then, she has worked at law firms and as in-house counsel practicing corporate commercial law and advising on a range of policy issues. Most recently, she was strategic policy counsel at the Law Society of Ontario and senior legal counsel at the Canadian Bankers Association. Tasmin was admitted to the New York Bar in 2005 and called to the Ontario Bar in 2011. Christine Allum partners with various groups and organizations to deliver investor education and fraud prevention workshops. Prior to joining the Ontario Securities Commission, she worked at the Toronto Stock Exchange. Her financial expertise includes financial literacy education, curriculum resource development, adult training, relationship management, and community outreach. Christine graduated from Ryerson University. Bridgett Catallier is passionate about investor protection. For the past 4 years, she has been Associate Director of the Investor Protection Clinic at Osgoode Law School, where she's also an adjunct professor. She's a member of the investor advisory panels of the Ontario Securities Commission and of the Canadian Securities Administrators. She's a fellow of the Chartered Governance Institute and currently serves as Vice President, Corporate Governance at Meridian Credit Union. And I'm Carrie Wong, Manager of Learning and Training at Prosper Canada. I'm responsible for leading learning and training strategy and initiatives, including the development and delivery of financial empowerment training and resources for organizations supporting financially vulnerable Canadians. Prior to joining Prosper Canada in 2019, I worked for 10 years in the public and private education sectors, including overseeing the training and development of frontline staff and educators. So welcome to all of our esteemed presenters today. We are so thrilled to be joining you soon and hearing from their presentations. But before we get started, we wanted to learn a little bit about our audience and hear from you. So we will be showing 2 polling questions that we would like you to participate in if you're able. So let me launch this, our first question, which is to ask what part of the field you work in. Do you work in a government agency, for a nonprofit organization? Are you in the private sector, community agency, or other? And if you are in another sector, we're interested to hear specifically what sector you work in, and you can provide your response in the question box. So I see now over 85% of you have voted. So I'll be closing the poll in 3, 2, 1. And our results is that the majority of you are working in the nonprofit sector. And we have 16% of you in the community agencies, about 5% and 7% in the private sector and government agencies, and 6% of you responded other. We have one more question. Which is to ask approximately what percentage of your clientele or the people that you serve in your work is interested in investing or currently invests. 0 to 25%, 26 to 50%, 51 to 75%, 76 to 100%, or unsure. So around 80% of you have voted. So we'll be closing the poll in 3, 2, 1. And sharing results here. So actually, the majority of your clients are not actually currently investing, but perhaps maybe thinking about it as an option, or you're working with clients who are not ready yet because they may be going through more kind of other types of money management matters that they want to stabilize before considering investing, which is still the information in this webinar will still be very valid for sharing that type of information, or to even help your clients see if they may be ready to engage in savings or investing conversations. And 25% of you answered unsure. All right, thank you very much for responding. So what we'd like to do now is begin our first presentation from Fair Canada. So Tasmin, I'm going to hand the mic over to you to begin.
Thanks very much, Carrie. Welcome everybody. Thank you for joining us. My name is Tasmin Waley and I am Policy Counsel at Fair Canada. Fair Canada is essentially an investor rights advocacy organization. So we champion the rights of individual investors in Canada through advocacy, education, and regulatory advancements. Next slide, please. So today I will be talking about investing basics, other ways to achieve your financial goals besides investing, some tips for vulnerable investors, and then financial well-being. So I'll begin with talking about the benefits of investing. Then I'll move on to, is investing right for me? And I'll highlight some key questions that you should ask yourself before you start to invest. Then I'll provide some investment tips for lower income investors. Next, I'll move on to other ways to achieve your financial goals aside from investing, namely saving and paying off debt. And finally, I'll turn to investing in your financial well-being, and I'll outline some key behaviors that have been linked to financial well-being. Next slide, please. So first of all, why invest? So let's start with the basic question of what is investing? So investing means committing funds to various assets with the expectation of generating a profit. So investing gives your money the chance to grow more quickly than it would in a savings account. It's a way to help you achieve your financial goals. Investing does involve risk, but if you have a disciplined long-term investing strategy, investing can help increase your wealth. Next slide, please. So is investing right for me? So there are some key questions that you should ask yourself before you invest. So first of all, does it make sense for me? Is investing the best way to help me achieve my financial goals? For example, it may be better to pay off high interest debt or buy life insurance instead of investing. If at all possible, work with an investment professional that can help you decide if investing is the right move for you. Next slide, please. Another key question to ask yourself relates to risk tolerance. So what is your risk tolerance? How comfortable are you with not knowing what you will make from your investments, and how comfortable are you with losses? You don't need a lot of money to start investing, but you do have to be comfortable with the risks. So I've provided here a link to a questionnaire from the Financial Consumer Agency of Canada, or the FCAC, that can help you assess your risk tolerance. So the links that I will reference throughout the presentation are all available in a handout in the handouts box that Carrie mentioned at the beginning of the webinar. Next slide, please. Another key question is, what is your investment knowledge? So do you understand the different types of investments, such as mutual funds, exchange-traded funds, equities, bonds, GICs, and also the different types of investment accounts, such as RRSPs, TFSAs, and RESPs? And a really important question is, do you understand the impact of fees on your investment returns? So all investments carry fees. Some may be charged directly, whereas others are built into the cost of the investment. So fees reduce the net returns, so that is the profit or growth from your investment. So it's important to have a clear understanding of them. And here I've provided a link to a quiz from the FCAC that can help you assess your investment knowledge. Next slide, please. Another important question is, might you be susceptible to fraud and scams? So a general rule that applies in many areas of life is, if something is too good to be true, then it probably is. So make sure you do your own research and carefully consider your options before investing. And it's important to understand what some of the common red flags are. And I've provided a link here to Fair Canada's website where we discuss some of those red flags. For example, is the investment promising high returns with very low risk? or, is someone claiming that they've got a really hot tip or inside information? Those are some of the things to be aware of. And Christine will be speaking next, and she will talk more about common investment frauds. And I've provided here a link to a quiz that can help you evaluate your fraud awareness. Next slide, please. So the next key question relates to time horizon. That is, how long do you expect to own a particular investment? And that will typically depend on what your investment goals are. So if you have a short-term time horizon, then you may favor investments that guarantee your return so that your money is there when you need it. So for example, if you're looking to buy a house in the next 4 years or so, then that's a short-term time horizon that would impact the type of investments that you make. If you have a longer-term time horizon, for example, if you're saving for retirement and retirement is 30 years away for you, then you may favor riskier investments because there's more time for those investments to recover if there's a market downturn. So it's important to have realistic expectations about investing and not to expect to get rich quickly from investing. Next slide, please. So on this slide, I've provided a few investment tips for lower income investors. So firstly, where possible, avoid borrowing money to invest. So this is a strategy called leveraging, and it can be quite risky because if your investments decline in value, then the lender may ask you to pay back all or some of the loan immediately. So in addition to losing money on your investments, then you still have to repay the loan you took out plus interest on that loan. So something to be mindful of. The next tip is to look out for financial products with lower fees. So as I mentioned earlier, fees reduce the returns on your investment. So when you understand the fees, then you can evaluate the true cost and suitability of an investment. And then lastly, consider getting advice from a knowledgeable, trustworthy person or exploring the use of a robo-advisor, which is a digital platform that uses algorithms to provide financial advice and investment recommendations. They tend to be relatively inexpensive, and they tend to take on investors that have small balances. And they've really grown in popularity over the last decade, so that's something that you may want to explore. Next slide, please. So I've talked about investing, the key questions to ask yourself, but what if you determine that, investing is not the right move for you at this point in time? What are some other ways to help achieve your financial goals? So one is saving. And this idea of an emergency fund. So ideally, you should have an emergency fund that covers 3 to 6 months worth of living expenses. So that may not be possible for everyone, but whatever you can put towards an emergency fund would be helpful. Another helpful tip for saving is to set up automatic transfers to your savings account at the same time as you get paid. The great thing about this is that you don't have to think about it, and saving really becomes something routine. And then another way to help achieve your financial goal through saving is if you have a tax refund, then you consider allocating some or all of that to your savings. Another way to help achieve your financial goals is to pay off debt. So there's a distinction between good debt and bad debt. So good debt is money that is borrowed to buy an asset that can increase in value, such as a house. Bad debt, on the other hand, is money that is borrowed to buy a depreciating asset or cover an expense. So for example, to buy a car. Excuse me. It's also important to look at the interest rate on debt. So credit card debt, for example, is it's bad debt and it's at a high interest rate, so paying it off is usually a very good financial move. Next slide, please. So I want to just step back a bit and talk about financial well-being more generally. So financial goals look different for everyone, but the importance of financial well-being really is universal. And financial well-being essentially means feeling confident that you can comfortably meet your financial commitments. So it means having control over your finances and the ability to withstand a financial setback. Next slide, please. And there's been some interesting research on financial well-being, in particular from the FCAC. So what does the research tell us? So money is the greatest source of stress in our lives, ranking higher than health, work, and family obligations. But when you have financial well-being, that often leads to less stress, happier relationships, and better health. And a really interesting finding, I think, is that financial well-being is more strongly tied to behaviors than it is to income. So having a higher income doesn't necessarily mean that you will have better financial well-being. Next slide, please. So what are some of the key behaviors that are tied to financial well-being? So there's 8 behaviors listed here. So the first is active saving. Second is not borrowing for daily expenses. The third is keeping track of your money. Fourth is exercising restraint when it comes to spending. The fifth is limiting your use of credit. The sixth is planning the use of your income. And 7 and 8 are informed financial decision-making and informed product choice. So out of these 8 variables, active saving was most strongly tied to financial well-being, followed next by not borrowing for daily expenses. So those are really the top 2 key behaviors associated with financial well-being. So what the FCAC concluded in this study is that, you know, this association between financial well-being and behaviors is quite encouraging because it's more possible to change your behavior than it is to, for example, significantly increase your income. So if you have the ability to modify these behaviors, to actively save, to not borrow, that can really be a key contributor to your financial well-being. So that's my presentation. Thank you for your attention, and I will turn it back over to Carrie.
Thank you very much, Tasmin, for this comprehensive overview on the basics of investing and all the helpful insights and resources you shared throughout your presentation. So just a reminder to our audience that all of the resources that Tasmin covered in her presentation are available for download in the handouts section of the GoToWebinar platform. And we'll also be putting a copy of the handout on our Learning Hub resource platform in the next few days. And would like to invite our audience to go to the question feature of the webinar platform to ask any questions to our speakers, and we'll try to get to as many questions as we can during the Q&A segment of this webinar. So next, we're pleased to hear from Christine Allum, who will share some investment protection information on behalf of the Ontario Securities Commission. Chris, I'm handing the presentation over to you.
Thank you very much, Carrie. Hello, everyone, and thank you to Prosper for inviting me to participate in this webinar. As Carrie mentioned, my name is Chris Allum. I'm from the Ontario Securities Commission, and today we're going to talk a little bit about investment fraud. So for those of you that are not familiar with the Ontario Securities Commission, we're a government agency, and we regulate the capital markets in Ontario. Basically, that means we set rules and policies and enforce those rules and policies for people that work in the investment industry. A key part of our mandate is to provide protection to investors. And one of the best ways to do that is to ensure that people have access to good information. So I work for Investor Office, that's a branch within the OSC. And within that branch, we have an education and outreach team. We have a research team, and we have a policy team. And basically, we're here to help you get good information so that you can make more informed financial decisions. So next slide, please. So what do we know about fraud? Well, in the world of fraud, we know that last year Canadians reported losing $379 million to fraud. This year, from January to July, Canadians had lost $284 million to fraud. And I believe that number now is up to $330 million from January to, I think it was September. So you can see that fraud is on the rise. But you know what's more concerning? It's estimated that less than 5% of frauds are reported. And many times we hear that people don't report the fraud because they're embarrassed, they don't want family and friends to know. I'm here to tell you right now, anyone can be the victim of fraud. All fraudsters care about is getting access to your money. Next slide, please. So what are some of those common types of investment scams that we are seeing? Well, the first one I like to talk about is crypto scam. And if you're not familiar with crypto asset, think about digital assets, something that you can't touch and feel. Digital asset or crypto asset could be something like a Bitcoin, digital currency. And how crypto scams work is that usually these fraudsters promise high returns in crypto asset investments. You could be approached by a friend, you may see an ad promising high returns, you can be offered to take part in an initial coin offering. That's very similar to an initial public offering when somebody says, buy this stock, first time this stock is going out in the market. So someone tells you, buy this coin offering, first time it's being offered out in the market, and you'll make oodles of money. You believe what these fraudsters say, you take part in their scam, you open an investment account, you trade on a crypto trading platform, and then you find it, when you go to that account, you don't have any money, you don't have any crypto assets. We have seen, I think it's about a 260% increase in complaints about crypto at the OSC. So we know that the crypto scams are on the rise because fraudsters know people are very interested in crypto. Next scam, please. Affinity fraud. And what's affinity fraud? This is a fraud that really fraudsters target groups of people that share common interest or particular communities, maybe somebody that's of the same religion, same culture. And how it works is they like to use the dynamics of the group against you. So they join this group to gain your trust. They're not interested in the same things as other members of the group. They're basically in this group to gain your trust. Once the fraudster gains your trust, they will tell you how they can help you make money. And because it's someone in your group, someone you trust, likely members will take part in this opportunity. Once the fraudster gets your money, guess what? They drop out of the group, and now everyone has been the victim of an affinity fraud. And this affinity fraud, we see it all the time. Many times, if you think about fraud stories that you've seen reported in the news, many times there will be an affinity fraud element to those cases. Next fraud, please. The other type of fraud I want to talk about is the Ponzi scheme. And this may be one that you're familiar with because we've had some famous Ponzi people in the news over the past few years. So what's a Ponzi scheme? Me, if I'm the fraudster, I may say to you something like, gosh, inflation is on the rise and our savings in the bank, it's not really making anything. We can't even keep up with the rate of inflation. You know what? Give me your money. let me invest it for you. I'm going to promise you high returns, guaranteed returns, no risk. And that's what I do as a Ponzi fraudster. I go around and I recruit people to give me money, promising them high returns, no risk. Now, the first group of people I'd taken money from reach out to me and ask to see some of those returns. So what do I do? Because now I have to show them that, you know, their money is making money. I go out and I recruit some more people. Those new folks that I've taken money from, I take some of that money and I give it to that earlier group. I say, here are your returns. And that's how a Ponzi scheme works. I take money from the new people and I pay those that I've promised money to earlier. The way this Ponzi scheme works is I have to keep bringing in more and more people into the scheme so that I get new money to pay others. When a group gets too big, me as the fraudster, I walk away because it's too much work for me to keep track of who I've promised, who I haven't paid, who I still owe, right? So when I walk away, this Ponzi scheme collapses. So these are just some of the types of frauds that are happening right now. Next slide, please. But what I want to talk about are some of those warning signs. How do you know that opportunity is not so good? First one, high pressure sales tactics. Have I got a deal for you, but I need your answer by 2 o'clock? I'm a fraudster. I just need you to sign on the dotted line, get into the act, you know, take part in my deal so I can move on to another victim. And also, I don't want you to think about the deal. So someone pressuring you to act right away, stop, take time, think about the opportunity. Another warning sign are these phone calls, emails, text messages from people you don't know. So someone you don't know reaches out to you and offers you a wonderful opportunity. Stop for a minute. You don't know this person. They don't know you. So you have to question, why are they contacting you and offering you this wonderful opportunity? How do they benefit? What's in it for them? So when you get these types of unsolicited offers, what should you do? Hang up, delete those emails, delete those text messages. Don't respond. It's in your best interest to not engage with these fraudsters. Another warning sign of fraud is free incentives. We all love getting free stuff, but sometimes, you know, depending on what it is, someone offers you a weekend away. You have to question that. Why are they offering you a whole weekend away in some fancy resort? Likely they want something in return. So just be wary when you get these free incentives. Next warning sign is promises of these higher guaranteed returns with little to no risk. When you invest, the higher risk the investment, there's the potential to make higher returns. But remember, that investment is higher risk. So you could also obviously lose everything. So when someone says to you, oh, you can make high guaranteed returns with little to no risk, those two terms don't go together. Higher risk, so likely you could maybe make higher returns, but you could also lose everything, right? Another warning sign of fraud is encouraged to recruit family or friends. You know, if I'm offering you a wonderful opportunity, or I say to you, I have an investment that can help you meet your needs, and the next words out of my mouth, do you have family and friends that might want to participate? Am I offering something that will help you meet your needs, or am I looking to get as many people as possible to participate in something? And then, of course, you want to ensure that, you know what, when you're dealing with someone related to investing, you want to ensure that you're dealing with someone that's registered. Anyone providing investment advice, selling investments, and even issuing investments must be registered with the Securities Commission in their province or territory. So you want to make sure that you're dealing with someone who's registered when it's related to investing. Another warning sign is someone suggesting that you falsify financial information. And how this works is, think back to affinity fraud. Someone offers you a wonderful opportunity and you You say, oh, I'd love to participate. I don't quite have the funds. And they say to you, as Tasmin mentioned, you can make a leveraged investment where you borrow to invest. And they're helping you fill out the loan application form and telling you to fudge numbers so you can get a very good loan. Someone not giving you good advice, like falsifying financial information, be very wary, not someone you want to do business with. And then the very last one, acting on inside information or hot scoop. If somebody says to you, I've got a hot tip, hot scoop, be very careful. They're sharing that information with you. Illegal, you're acting on it, illegal. And if it's a fraudster, how do you know they actually have a hot tip or hot scoop? Next slide, please. So what can you do to protect yourself from fraud? Keep your personal and financial information private. Don't respond to these unsolicited calls, emails, text messages. Be careful when you're posting personal information online because fraudsters are also on there looking for your information as a way to connect with you. And you know what? Another thing is they can also reach out, use different types of scams and ask you to send money. Just be wary. Someone offers you a wonderful deal. Take time to verify that opportunity, that deal. You don't want anyone to pressure you into investing. And remember, if that deal sounds too good to be true, it probably is. And lastly, know who you are working with. Do a background check. Next slide, please. Check the registration of that individual who's making that investment recommendation, who's selling you that investment, because registration tells you that person has the qualifications, the knowledge, the skill to provide you with that service, that product. How can you check registration? You can go online, checkbeforeyouinvest.ca takes you to a national database where you can check the registration of that individual, or you can call the Ontario Securities Commission and we will help you check registration. We have a toll-free number. It's 1-877-785-1555. Next slide, please. Where else can you get more information? We have a website. We're here to provide you with unbiased information. Everything I've talked about and much more you can find on our website, getsmarteraboutmoney.ca. Next slide, please. So key things to remember, you can contact us if you suspect fraud, if you want to check registration of an individual, if you have an investing question. Where to go get information? Our website, getsmarteraboutmoney.ca. And that said, that concludes my end of the presentation. Thank you very much.
Thank you very much, Chris. That was a very informative and intriguing presentation. I think you've shared today, well, a lot of what you've shared will resonate with many of our listeners and can hopefully help everyone to identify frauds and scams before falling victim. So if you have questions for Chris, please enter them into the question box. And I see that we've had a couple of people ask about how we check if someone is registered. I believe that the website that Chris shared earlier, Check Before You Invest, is the place to go. And Chris, would that be the best place, or also to call the OSC directly via the number you provided?
Yes, they can certainly go online, checkbeforeyouinvest.ca, or they can call the OSC at 1-877-785-1555, and we will gladly check registration for you.
Okay, wonderful. Thank you very much, Chris. So if there are any other questions, please continue to answer them for any of our panelists, actually, and we'll go through them at the end of our webinar. And we'll hear now from our third panelist, Bridgett Catallier from the Investor Protection Clinic at Osgoode Hall Law School. Bridgett, passing the mic over to you.
Thank you, Carrie. Thank you. So good afternoon, everyone, and welcome to this webinar. My name is Bridgett Catallier. I'm Associate Director of the Investor Protection Clinic at Osgoode Hall Law School, which is the law school of York University here in Toronto. And it's a pleasure to participate in this webinar, this Prosper Canada webinar. Next slide, please. So this afternoon, I'm going to go through three things. So first of all, I'll provide an overview of the Investor Protection Clinic and its role in promoting investor protection. I'll also discuss key issues facing vulnerable investors and conclude with how the clinic provides investor education. So what is the Investor Protection Clinic? We are a legal clinic that offers free legal advice. So our services are free and we specialize in investor protection issues. So that means our clients are people who have invested and they suffered losses and they believe their investments were mishandled. So what does that mean? Their losses were due to wrongful act or fraud. Our case files are managed by students. So they're law students who manage the client files, but they are under the oversight of clinic directors, such as myself, who are lawyers. And we also have leading business law firms who support our students, who work with our students on these files. And their services are also free of charge. Next slide, please. So what is our process? So individuals reach us, investors reach us generally on our website. So they find us, they Google investor protection, they find us. We have a website with information, including a form that they can fill describing their issue and their contact information. They also can call us. We have a phone number, you'll see it at the end of my slides. Or we also get referrals from regulators, from law firms, and from others. Once they reach us, every single investor who contacts us, we give them an interview. And their complaints are generally around, their investments were mishandled, they're paying very high fees, their instructions were not followed, they are low-risk investors and their investments are in high risks, they got inappropriate advice, or even regretfully, we see a lot of fraud. And as you've heard from Chris, the different types of fraud. Next slide, please. So what does the clinic do for these clients, investors? So first of all, we investigate the file and we see if we can help. And help means obtain compensation for losses. Even in cases where we conclude that we cannot help a client, we try to provide closure. And what we do is we explain to the client what happened, why they suffered losses, and why we can't help them. For example, it's a fraudster and we can't, that person, we absolutely can't find that person, or the person doesn't have any assets, is unable to compensate them. In cases where we do take on a file, we first, investigate and sit down with the client so they can understand what their options are. The first thing we do is we always draft letters. We draft a complaint letter or a demand letter where we try to negotiate compensation for our client. Negotiating a settlement is always the easiest and fastest and best way to obtain in the best interest of the client, to obtain compensation. When we can't negotiate a settlement, we may often have to go to court. And most of our cases are before the small claims court because of the amounts. In Ontario, the small claims court is for cases below $35,000. Next slide, please. So I'm going to go through two cases. These are real cases we had on a no-names basis where we obtain compensation for clients. The first one is a client who is over 60, and he was approached by an advisor at a family gathering. So this advisor was a registered broker, so that means he was licensed. So the client was advised to take out a bank loan to invest. So this is what you heard both from Tasmin and from Christine. This is a leveraged, very risky product. So in essence, what the client was told is, take out a bank loan of $5,000. I'll invest that amount, and the return will pay for your interest, and you'll even have more money. This client had no money. It was a client who had no income, and unfortunately, the investment declined in value very quickly, and our client was unable to pay back the loan. The bank called the loan and sued the client in small claims court for the amount of the loan. So that's where we stepped in, and we negotiated with the bank. So the first thing we did is we made sure the bank would reduce the amount, and we obtained an offer of $3,200 instead of the $5,000 that was outstanding. And then we went and filed a complaint with the broker, and the broker offered to settle with the client for an amount over $7,000. Now that may seem a lot for you, but for the client, that was compensating the client for the loan, the interest the client had paid throughout the years on this loan, and also the amount that the client should have received from these investments that the client did not receive. The client didn't receive returns. So this is a case where the client was compensated for losses. Next slide, please. So the second case is really a case where there was fraud. So this was a single parent with low income who had set aside over many years small amounts with the advice of a friend who was a broker at an insurance company. So these small amounts amounted to $10,000 over many years. But the client came to see us realizing that amounts had been withdrawn from his account without authorization. So we investigated and realized that the client had been defrauded over $9,000 over the course of several years. So this was a long-term investment, and the client didn't realize that his friend had falsified his signature and withdrawn amounts from his account. So the clinic helped the client. Two things. First, we filed a complaint with the police and cooperated on the police investigation because this was fraud. And second, we filed a complaint with the insurance company, and we obtained a full reimbursement for the full amount of the loss and also a refund of any fees on the account. So our client was made whole and compensated for his losses. Next slide, please. So this brings me to key challenges that we see. So the first one is, in most cases, our clients have low investment knowledge, and really investor education is so important. It's important to have the basics of investment and also to be able to see the red flags, when something is wrong with respect to investments. Webinars such as today are key to gaining that investment knowledge. The second challenge is obtaining advice when you have only small amounts to invest. Generally advisors will chase the most, wealthy clients who have large amounts to invest. You'll recall that Tasmin referred to robo-advice, which is one way to obtain advice for small investments that you can consider. And finally, scams and fraud. We see a lot of that at the clinic, and I won't go into that because Christine covered that fully. Next slide, please. The Investor Protection Clinic is on the ground. We work with investors who have been harmed, suffered losses, and we also offer investor education. We've produced a great series of videos on investor protection. There are 6 videos. They're short, 15 minutes each, and we've offered you the links to those videos. We've also produced a guide to avoiding crypto scams because we saw a lot of crypto scams in the last year. And that's also available as part of your resources for this webinar. And finally, community outreach, such as today's webinar, our participation with Prosper Canada, and our role in helping vulnerable investors invest with confidence, knowing that if they suffer losses, the Investor Protection Clinic is there to offer them free legal services. Thank you very much. I'd be happy to answer any questions you may have.
Thank you very much, Brigitte. We did have one question from an audience member, which is to ask if the Osgoode Investor Protection Clinic is accessible for all Canadians.
The answer is yes. We are a national clinic, and we have had, investors throughout Canada in various provinces. We also offer our services in many different languages, and we offer interpreters free of charge when we don't have someone who can assist in the language of our client.
That's wonderful. Thank you so much. This was, again, a very informative presentation, and I think provides some hope and a very important resource for those who fall victim to fraud, scams, or malpractice. And the work that the Investor Protection Clinic is doing is very commendable. We're very fortunate to have this clinic as a resource. So we'll be heading into our Q&A portion of the webinar. If you have questions for any of the panelists, please continue to input them. In the meantime, we wanted to alert you to where the resources were available that's shared by our webinar panelists and that can supplement today's discussion. They're currently available in the handouts function of the GoToWebinar control panel and will also be emailed to all webinar registrants. We also had a few of you ask about like proof of attendance for the webinar. So we do not generally provide a certificate, but if you write us email, which will provide the email address towards the end of the presentation slides, we can provide you with an email that you can use as proof of attendance to submit for your continuing education credits or so on. All right, so I'm going to begin with a general question. I'll direct this one to Tasmin. And we had a question from the audience that asked if you have any advice or suggestions on recommendations to provide to clients who are eager to begin investing but don't have base financial security. For example, they don't currently have emergency savings or have very limited income support because they may be on income support. Where would you say might be, good things to consider or recommendations to provide?
Thanks, Carrie. So I would go back to one of the items that I highlighted in my presentation, which was this idea of making saving routine. So, when you do get some income, having a portion of that go directly into a savings account, I think that's really key because it basically automates the savings process. And then once you've built up a little bit of savings, then you can determine whether investing is the right move with respect to those savings that you've accumulated. So I think that's a key step, before beginning the investment journey.
Thank you, Tasmin. I have another question. This one is for Christine. And speaking to more specifically about a type of scam that this audience member has witnessed quite frequently amongst clients. The situation is that casinos keep contacting clients that they want up to thousands of dollars as a result of the online spins that the casino itself does. It sounds like they're a scam, but they are a registered business. So what sort of advice would you have around this or verifying whether this is indeed a scam or not?
That's a great question. Businesses can contact us using the phone, and scammers also like to contact us using the phone or email or whatever. My thing is if someone contacts you and it sounds like something you're interested in, or it sounds like the organization is one that you have a relationship with, but you're not sure, call the organization directly. So example being, one of those common frauds that's out there is the warning about your finances, where someone claims to be from your bank and tells you there's a problem. if my bank called me and told me there was a problem and needed information from me, I would share it right away. But I wouldn't give that information to whoever called. What I would do is thank them, or I see that email, I would delete it. And then I would go and I would look up the phone number for my bank and call them directly and ask if there was an issue with my account, if someone had contacted me. That way, at least I'm sure that, you know, I am actually speaking with someone that actually works for that organization before I share any information. So someone contacts you and says, you've won money, and likely, you know, if you're with that organization and you've had that relationship and been there, and there's a good chance, okay, that's fine. Contact the organization directly and at least verify that, you know, that person you're speaking to works for the organization, and they can check and tell you if you've actually won or not. That's one of the things you want to do is verify, know who you're dealing with, know who you're talking to before you share any information, before you do anything. That's a great question. Thank you for that.
Thank you. That's great advice. Thank you, Chris. A follow-up question, which states that the check before you invest.ca is, it says it's based in Ontario, and this person would like to ask if we're living in other provinces, are there other places to call to get help or to check registration?
Certainly. So actually, if you go online, checkbeforeyouinvest.ca takes you to a national database. So all the provinces and territory, we contribute to that database. So anyone that's registered in Ontario goes into that database. Other provinces, they will also enter that information, and same with territories. So when you go online, you can check. But if you live in another province and you call your securities regulator within that province, and the individual or firm you're dealing with is in another province or territory in Canada, somewhere else, they can check. They can still get you that information. So both ways, you go online, you can definitely get the information. You call your local securities regulator, they can also check and get that information for you.
That's great. And we have one last question for Chris, where this person states that cryptocurrency is a challenge that they've noticed in the community, especially for youth. You know, it's increasingly available, and some practitioners don't necessarily have a lot of knowledge in crypto. So where can they find trustworthy information to educate their community on this topic?
That's a great question. You know, this person is asking something that many people ask when we give presentations, because there's a lot of interest in crypto, but it's such a new, I'm going to call it a field. It's such a new thing that many of us don't quite understand it. So in response to that, we actually have a website. It's called getsmarteraboutcrypto.ca. And that website is basically the basics of crypto 101. So it can help you understand what those crypto assets are, the different types of assets, how you buy it, and all those good things. So if crypto is something you're interested in, I would highly recommend that you visit getsmarteraboutcrypto.ca.
Great, and we'll close with one question for Bridget, which is to ask about the services at the IPC. Does the Investment Protection Clinic specifically provide service only for investors?
So the answer is yes. We generally provide services to retail, so individual investors. We sometimes touch upon banking issues, which are, you know, more with respect to bank accounts as opposed to investments. And we sometimes touch upon insurance issues as well. But I would say a large majority of our cases are with respect to investments. You know, as I mentioned, we offer an interview free of charge to every individual who reaches out to the clinic, either through our website or by calling us. So we sit down and, you know, either virtually online or in person and understand their situation and investigate their case, every case.
All right, thank you very much, Bridget. So we had a couple of additional questions where if you didn't have time to get to yours, not to worry. We will be connecting with our panelists offline to get some additional responses to your questions, and we'll put them into the final copy of the slide deck that will be available for download in a couple of days. So we are at the end of the hour, and we want to thank Tasmin, Christine, and Bridget for sharing such helpful information with us. And thank you to all you, our attendees on the line, for joining us. We'll be sending all of you an email in the coming days with the slides from today's presentations, the resources provided by our panelists, a link to the recording, and a link to a post-webinar survey. We'll also post the recorded webinar and other relevant resources on our Learning Hub that can be accessed by visiting learninghub.prospercanada.org/webinars. And we would like to thank the Ontario Securities Commission and the Investment Industry Regulatory Organization of Canada for their support to make this webinar possible today. We encourage you to access our full catalog of past webinars on our Learning Hub and other resources, which are continuously being updated at prospercanada.org. Sorry, my apologies, learninghub.prospercanada.org, but please also visit our main prospercanada.org website as well. And our panelists, as well as Prosper Canada, always welcome questions, comments, and suggestions. It can be reached using the contact information listed here. Thank you again for attending today's webinar, and we hope to engage with you at our next one. Have a wonderful rest of your day. Bye-bye.